Hey, everybody. Welcome to the morning market briefing. It's Wednesday, January 11th, 2023. I think I said 2022 the other day, but it's 2023. Hope you guys are doing well. Tom, coming to us live from beautiful Orlando. What's the situation?
It's nice. It's sunny. It's probably about 50 degrees. Pretty cold this morning. It's been warm all week. And we were supposed to fly out this morning, but the FAA has grounded all flights because there's some sort of glitch with their software. So Ben and I and Jason will probably be in Florida for the foreseeable future.
Fun times.
Yeah.
Hey, could be worse.
Yeah, a lot of people really enjoy and want to go to Orlando. I am not one of those people.
Did y'all make it to Planet Hollywood?
We tried. So for those of not in the know, we haven't gone in a couple of years because of COVID, but there's a conference we really like down here, and the Narwhal boys always go to Planet Hollywood and get our picture taken with their weird dome video screen with the Narwhal boys up on the screen. But for the first time in the history, there is more than about 3 people there. There's hundreds of people at Planet Hollywood, and there was a 2-hour wait, so we didn't go. So the tradition is officially over. It's very sad.
No fun. How's the conference? Good?
Conference is strong. We've seen a lot of companies. Between the 3 of us, we probably sat in on, I'd say 40 to 50 companies with CEOs, CFOs, talking about, sort of the nature of what 2023 looks like from an outlook. A lot of restaurants and retail. Yesterday, we saw the CEO of Neiman Marcus, who was a real standout. He's a wonderfully dressed Belgian man named Geoffroy. And so if you can think about what you think the Belgian fancy boy CEO of Neiman Marcus looks like, what you're picturing is exactly correct. And his name is Geoffroy.
Love that. Ben, any thoughts? Has been on?
Yeah, it's I think the big takeaway is inflation is coming down. People they don't want to raise prices. We heard that from Dutch Bros. We heard that from Bar Taco. They were all talking about really wanting this idea of inflation fatigue, pricing fatigue. And they said that we don't really want to raise prices this year. So I think inflation is coming down. And I think that there was this tone of overall optimism from a lot of these CEOs. I think that they were a little bit hesitant to be optimistic, but I think the trends for the last couple of weeks, even post-Christmas, have been quite good. Now, a lot of these guys are in services, which has been an area of better growth. And so I think they're probably benefiting a little bit from that. But even when we were sat in on the Haverty's Furniture, they're an Atlanta-based company, been around since the 1880s. And they were saying that, they're not seeing any weakening in their business. They say that they tend to lag housing by about a year, and that they're actually seeing some pretty good strength. And it's a stock that trades at 6 times earnings. So that's one that we're going to take a look at a little bit more. And there are a few others that are seeing some good growth. Planet Fitness just had its best ever start to the year in terms of new signups, which is obviously critical for the gym space. So I think that you're seeing some guarded optimism from CEOs within the context of inflation probably decelerating a bit.
Good stuff. Well, let's jump into some of the talking points for today. We did hear from Powell yesterday at a summit in Sweden. Didn't really get into the weeds much, Tom. I don't know how much of his commentary you kept up with, but I think maybe the biggest takeaway was his quote that we are not and will not be a climate policy maker. He's been getting some push from Congress and others to talk more about monetary policy through the lens of climate change and climate control. He basically said, hey, that's not what we signed up for. That's not part of the mandate. Tom, do you have any major takeaways from what he shared?
Yeah, there wasn't a lot of takeaway in terms of monetary policy at all. This has been something we've talked about a bunch over the last couple of years. Obviously, there's been a big push from Democrats to add this as a mandate to the Federal Reserve, in addition to, taming inflation and making sure we have maximum employment. They want to say, hey, we want to make sure we're looking out for the environment. The ECB is taking that on. And I think it's good that Powell is here. He's talking to those people. He's having conversations with what, potentially the ECB is going to do in that regard. But I just don't think it's what they need to be focusing on. And he said that exactly. He said they're going to quote stick to their knitting, which is monetary policy, and not get into the politics of climate change, which I think is a net positive.
Yeah, I mean it's still a complicated situation economically. I mean, we talk, as you guys just mentioned, potentially inflation coming down, things like that. But the job's not done, as we've alluded to in comments even earlier in this week on some of these calls. And I mean, the climate stuff just seems like such a distraction for those guys.
Yeah, definitely.
Also had pretty good bond auction yesterday, the 3-year, very, very strong. We got a 10-year today. What'd you see from that, Tom?
I mean, it might have been the strongest auction I've ever seen in my career, which makes sense because really in my career, we've not seen as high a levels of the 3-year treasury. It's just tremendous value right now. The bid to cover, which is kind of the metric for how many people were trying to get their hands on these new issued treasuries, was 2.84. So almost for every dollar of treasuries being issued, there was almost $3 worth of demand. And so, we just had unbelievable demand. We had almost 70% take on indirect. So people in foreign countries are really trying to get these bonds and access the U.S. Treasury market. And only 17% was left over for the banks that actually issue them. The Goldman Sachs of the world, dealers who are responsible for issuing the treasuries, only took 17%, which is an all-time low as far as I can tell. So, people are excited, I think, for the first time to see some yield, and this is a really good indicator. We've got a 10-year auction on tap today. The 10 years kind of around that 360 range, which is much lower than it has been in the last 12 months, but still really excellent levels. So I'll be interested to see if people are as excited for the 10-year, because you're getting less yield than the 3-year, and you're taking on treasury. So we'll see, what that looks like. I would expect it not to be nearly as high, but it should be pretty strong, I think.
Good stuff. Ben, Apple continuing kind of on this path of going it alone. Reports that they're going to get rid of Broadcom chips and Qualcomm chips. This morning, now there's talk that they are going to start using their own displays rather than Samsung displays beginning in 2024. What's the angle here for them as they try to bring everything in-house?
I think they're looking at more margin opportunity for themselves, and I think they're also looking at a little bit more control over their own supply situation. And then now with Qualcomm, we've known for a long time that they're trying to move away from the Qualcomm chips, but it's been very challenging for them to actually design their own modem. And again, Apple's not actually going to be fabricating these in-house, but they are doing the design, and then they'll have a company like Taiwan Semiconductor or a company like Foxconn actually perform the fabrication of it. So you're basically transitioning from outsourcing the entire design and fabrication work to all the design is done in-house, and you just hire these contractors essentially to go and build your design. And that's the model that Apple's increasingly trying to pursue. And that should be good for margin over time on a margin per unit device, because you control more of the means of production of that product. So I think that's the overall strategy there. I think that it also does create increased risk when you are as vertically integrated as that, because you can't easily switch out suppliers and switch out designs to the best available alternative. You have to go with what you're doing in-house, and when you're betting on yourself for everything, you have to be the best at everything in order to have the best product, because there'll be other companies who try to cherry pick a software, try to cherry pick a chip design, cherry pick a contractor, and aggregate those together and could assemble a superior product. So Apple's really betting on its own design team in order to do this.
Good stuff. Thanks, Ben. Wells Fargo also announcing that they're going to essentially restructure their mortgage business. In the past, their strategy has largely been to reach as many people as possible. They've been one of the largest lenders in the mortgage space. They're also going to reduce some of their exposure to even on the origination side. They're going to focus more just on their existing banking and investment clients in terms of who they want to be working with. Basically, this is going to shrink that line of business. Ben, are you surprised by the timing at all, given where rates are?
I think the timing makes a whole lot of sense, frankly. I think that the mortgage business was like fading away anyway. So right now, getting rid of your mortgage business, you really lose very little because there's not really much to lose because the mortgage business is so slow at the moment. I think emphasizing the borrowers in minority communities, I think is something that stands out. And then also the existing relationships that the bank has. Basically, the problem with doing mortgages at a bank is that the regulation is such that it's much more expensive for the banks to do. It's not an economically viable business for a bank to be in. And Jamie Dimon of JP Morgan actually talked about this years ago. And Wells Fargo has hung on because they've been so reliant on what they call non-interest income, kind of those non-banking activities. That's what really drove them over the first half of the 2010s. And that's why Wells Fargo traded at one of the best premiums in the business. But now that the mortgage business is pretty much not there and they've run into more regulation issues, the risk reward of continuing to run that business is very low. They're going to be able to sell what they call mortgage service rights at historically high valuations. And there are some financial vagaries that we can get into on that I'm not going to get into right now. But essentially, you're exiting at a very opportune time if you're Wells Fargo, where the risk is extraordinarily low and the reward is potentially higher than normal. So I think it's a smart move by Charlie Scharf, and the stock probably should be up on this. I would say it should be up on this, but I think the headline will be Wells Fargo is retrenching, something's not right. But I think that this is an astute move by the management team over at Wells Fargo.
And you think of just the history they've had. I mean, consolidation accompanied with some tightening of controls is probably not the worst direction for Wells Fargo to be going at this point, as they try to kind of rebuild their image, even just on Wall Street. So I don't disagree with what they're doing, and it makes sense in terms of the valuation they can get for the servicing at this point. We're going to wrap it up there. Markets up a little bit. Crude oil, man, having a nice little run here, up 1.5%. Up again today. Dow futures up 24 basis points, S&P futures up 30, NASDAQ up 26, gold's up a little, silver's up a little, pretty much everything slightly positive, with the exception being the butt of every joke, crypto, down just a bit. Well, guys, stay safe. Hope you get home at some point. Pretty wild FAA outage. I mean, what are the odds?
Yeah, I guess we're gonna see if we can get a late checkout because we've already been delayed to noon. I don't think we'll get out at noon. And I guess we'll be plugged in. You know, at least we have somewhere to be, and we've got laptops and everything, so we should be plugged in for most of the day. But it should be interesting.
Good deal. Good deal. All right. Well, safe travels whenever they may be. We'll wrap it up there. Talk to you guys soon.